Welcome to Novara Live. I'm Michael Walker. It's been another incredibly chaotic day in global financial markets. Lots to discuss and lots of great guests lined up for you. First tonight, I'll be speaking to Grace Blakeley about the sell-off of US Treasuries. Now, if you don't yet know what that means or why that matters, don't worry. It will all be explained. Then I've got an interview with Zoe Liu on the other big story of the day, which is China hiking tariffs on the US to 84%. Of course, that's in response to the US imposing tariffs of 104% on China. In the final part of the show, I'll be joined by Helena, aka NoJusticeMTG, to discuss the right-wing influencers who are already losing millions due to Trump's trade war and are getting buyer's remorse for having backed Donald Trump before last year's presidential election. Do stay tuned for all of that. Before we get started, though, I'd like to remind you that we are currently hiring. We're looking for an additional live stream producer to join our team and help us expand the production of this show. The ideal candidate would have demonstrable experience in live broadcasting environments, as well as strong knowledge of left-wing politics and current affairs. From a personal experience, this is a brilliant place to work. If you want to come and join us, do apply. If you're feeling nervous, just go and do it. You know, even if we sort of think you're not quite right for that job, you'll go in our list of contacts. It's really worth getting in touch. And to find out more, please go to the link in the description. On tonight's show, as ever, make sure to let us know your comments in the YouTube chat, or you can tweet us on the hashtag #NovaraLive. Donald Trump's sweeping tariffs came into effect at midnight last night, meaning consumers and businesses in the United States will start to get hit by surging prices of pretty much all imports. Now, this troublesome situation has prompted a sell-off of US government treasuries. That means investors are demanding higher interest rates on US government debt. And to add to all the drama, China this afternoon has whacked up their tariffs on US imports to an eye-watering 84%. 3 big stories. We'll go through each of these developments in turn, starting with those tariffs which have just come into effect. Now, these are the 8 top traders with the United States, and you can see the tariffs they now face. So the largest share of US imports are from the European Union. Firms from the European bloc now face 20% tariffs on anything they sell in the United States. The next biggest trader is China, whose firms will now have to pay a massive 104%. Japan is the 3rd biggest trader with the United States. They'll pay 24%. Next is Vietnam, whose exporters to the US face a massive 46% tariff. And then we've got South Korea, Taiwan, and India. They're each paying tariffs of between 25 and 32% on all exports. And last, we have the UK, which is paying tariffs of 10%. So compared to the other big traders, we're not doing too bad, but that's because we don't actually export that much to the United States. The added costs to companies exporting to the United States will feed into higher prices for American consumers, but the costs will be most immediately felt by the companies who actually do the importing. That was made clear in this example discussed on Fox News.
There's an item in the New York Post that we all have in front of us. It's an exclusive story, and it talks about how with these 104% tariffs that went into effect, we think that China is going to have to pay for it, but it tells a story of a special needs toy importer. And when the tariffs went into effect at midnight, his tariff, he's been paying a tariff because he gets stuff from China, $26,000 a year. His tariff bill went from $26,000 at midnight to $346,000. And that's money he's going to have to come out of his pocket. It sounds like he's going to have to go ahead and close down part of his business. He tried to make the toys in the United States, but the tariff on that, his most popular item, went from $0 to $17 at midnight. And what he told the New York Post is people don't understand the tariff situation. They think just foreign countries are paying for the tariffs. That's not true. Half of the tariffs are being paid for by U.S.-based companies. Yeah. So when you look at the big numbers and they look good, just remember that according to this guy, half of the small businesses and half of the tariffs are being paid by Americans.
Well, so you heard there about a special needs toy importer, and that's a sympathetic business if there ever was one. Their tariff bill has gone from $26,000 yesterday to over $340,000 today. That's just the impact of these these Trump tariffs going into effect last night. Of course, significant actually that was being read out on Fox News. They were looking at a report in the New York Post, which is also very much a right-wing newspaper. So it might well be Trump supporters reading that story or watching that news show. Of course, Donald Trump's hope is that the increase in the price of imports from China will cause firms to move production to within the United States. So these special needs toys, in this example, are made in the US, not overseas. As we discussed earlier in the week, though, the problem there is that no one really wants to make big investment decisions when there is so much uncertainty. Do you want to really build a toy factory in the United States at the moment when you've got no idea what's going to be the situation in 3 months' time or even 2 weeks' time, right? You need a 5-year horizon to build a factory. That's not what they've got. Hence, all the trouble in the stock market. Also, if you move production from a country like Vietnam to a country like the United States, so if you do have businesses who are willing to make that investment, willing to take that risk, it still won't be ideal for consumers because prices will still go up massively. Now, Matt Priest is president and CEO of the Footwear Distribution and Retailers of America. He said this to CNN.
If a $100 pair of sneakers costs $100 made currently, whether it's in China, Vietnam, or Indonesia, if it was made in the U.S., how much would that pair of sneakers cost?
$300 or $400 easily. Yeah. In fact, we've even just looked at the tariffs coming into place tonight at midnight. A $150 pair of running shoes will be $230, right? Wow. And that's coming from overseas sources without U.S. labor.
Tariffs.
That's just with the tariffs. Mm-hmm. Yeah.
Folks will feel that. Matt Priest.
They will.
So we're saying if production was moved back to the United States, then trainers that cost $100 would cost $400 because obviously labor is a lot more expensive in the United States than it is in Vietnam. And then if that production doesn't get moved, or I suppose it hasn't got moved yet, so now when you're importing trainers from Vietnam, they'll go from 100 to, I can't quite actually remember the figures, but presumably at least 46% more, which is the tariffs which are currently on Vietnam. Now, this is, of course, all bad news for profits and for consumers, which is why we've seen a big hit to companies' share prices since the tariffs were announced. If people think their profits are going to go down, then obviously you don't want to invest in that company. You might sell your shares. We spoke about that a lot on Monday's show. Something new today, though, in the markets is that investors haven't just been selling shares. They've also been selling off US Treasury bonds. Now, Treasury bonds are the IOUs that investors can purchase from the US government. So when you buy one, you're basically lending money to the federal government. And as of today, investors are demanding a higher interest rate for that lending. Now, this has surprised many observers as treasuries are thought of as the safest of all assets. Now, that's because while companies might go bust, the American government is very unlikely to. Or, to be more precise, if it did, capitalism would be over anyway. So it wouldn't matter that much. Right? When uncertainty is high, you flood to buy American government debt. But that's not happening this time. We're in a moment of uncertainty. People are selling their stocks, but it doesn't seem like they're buying treasuries. In fact, they're selling treasuries. This is what's got lots of people spooked who follow the financial markets. Now, to get the lowdown on what this means and why it matters, I spoke earlier to economics commentator and good friend of the show, Grace Blakeley.
This is really significant because treasuries are like the foundation of the global financial system. They are a core part of the plumbing of what makes global finance go around. They're supposed to be the safest asset in the world economy. US government debt is supposed to be the thing that everyone wants to hold as a kind of safe haven because nobody expects the government to default because it's denominated in dollars. Everyone wants to have dollars. They want to have an asset that's easily convertible into dollars. So the fact that these treasuries are being sold off is it's really fascinating because generally speaking, when you have a market panic like the one that we have today, you would see a kind of flight to safety. So people taking money out of assets that are perceived as risky, and equities are generally perceived as more risky than bonds because especially when you're looking at a recession, it means corporate profits are lower, which means, you're going to get less dividends. The value of those shares are going to generally decline. Whereas bonds tend to be seen as much safer. They deliver a kind of steady return. through periods of crisis. And especially in the environment that we have now, where we have relatively high expectations about inflation, that means interest rates are going to be, stay relatively high, which means if you own bonds, you're going to get, a solid return, if not a kind of excellent return. And, the big thing is that when people are worried about other assets, they would buy bonds, and particularly treasuries, if they were really thinking, I want to hold something safe in a time of crisis and scarcity. And the US government debt kind of losing its safe haven status, and actually, that kind of happening to an extent with the dollar as well, is really significant for, firstly, the operation of financial markets. This creates a lot of kind of quite complicated problems for financial institutions and for the kind of system of global finance that underpins how so much kind of trade and investment takes place. I won't get into all that now because for lots of reasons, it's very complicated. We don't exactly know what institutions are being affected at this particular point in time. It's going to take a while to see where the real crises in that system emerge. But it has already been described. What's been happening in markets today has already been described as something of a kind of Lehman moment for this crisis. So we'll see over the coming weeks the real impact that this has on international financial markets. But it's going to be significant because these things are everywhere. They are part of the plumbing. They're really important assets that most institutions will hold. But over the longer term, there's this issue of, America is supposed to be the hegemon. It's supposed to be the guardian of global capitalism. And that's really the fundamental reason why people want dollars, why people want treasuries, because you are holding assets of the capitalist superpower, basically. And everyone believes that when there's a crisis, that capitalist superpower is going to step in to stabilize the system. And Trump is doing the opposite, which has huge implications for how people think about not just kind of investment and trade and growth, but capitalism itself, the nature of this system of global trade. And what comes out of the end of that, there's obviously a short term, a lot of pain, but it will be fascinating to see what comes out of the end because there are a lot of potential opportunities to rewrite what is currently an extremely unfair and unequal system of global trade and investment.
Yeah, so I see what you're saying about opportunities. I mean, clearly there's also some big risks, maybe medium-term risks as well. So Vietnam is the example I keep thinking of. So this is a country where I think a third of their GDP comes from exporting to the United States. Now, they've had 46% tariffs slapped on them. Now, I mean, that seems like a trading relationship which will have got worse, and that could seriously damage the Vietnamese economy. So I mean, what would you say when it comes to a situation like that?
Yeah, I mean, this is a really significant factor. And what you've seen is a lot of the kind of like lower value manufacturing that used to take place in China has been pushed out to other Southeast Asian countries that now, kind of undertake much more trade within, things like textiles, for example, where Vietnam is really significant. So there is going to be a lot of pain there. It's really hard to see how this plays out because if these tariffs that he has imposed remain in place, the shock is going to be enormous in terms of the potential impact on trade volumes and therefore export revenues and therefore, GDP, not to mention the contagion effects that are going to happen through investment as companies basically realize, okay, we're screwed. We're going to have to hold off on investment, a recession, etc. And what is kind of crazy about that is the way that they will likely affect so many countries at the same time. Generally speaking, global recessions are very rare. Before 2008, the definition of a global recession that the IMF used was when global growth falls below 3%. So it's not that the global economy goes into negative growth, it's just it's growing less than 3%. Now, the financial crisis changed that to an extent because it did create a much more kind of coordinated slowdown. But again, even then, you didn't have simultaneous recessions almost, everywhere. What we are going to see as a result of this trade war is potentially a coordinated global slowdown in loads of countries at the same time that creates a kind of negative spiral and contagion effect. If you think about what happened after the financial crisis, it was growth in basically China and a few other kind of developing economies that really dragged the global economy back out of recession. And it's hard to see where that is going to come from now, because as you say, there are all these, 60 countries, I think it is, that are targeted with specific and quite high tariffs. Those countries account for a large percentage of the world economy, and all of those countries being hit at the same time. And then the retaliatory tariffs as well is going to create a huge, huge amount of suffering. Now, whether or not that the global economy can take that, whether or not Trump can take that, the US can take that, remains to be seen in terms of the short-term impact. Over the long term, it is very hard to see how those countries affected do not respond to this by trying to diversify their trading relationships and build up much more trade amongst themselves. And actually, if I were the politician in Europe, for example, I would see this as a really significant opportunity to build new trading links with some of these countries that are worst affected with the US, and to kind of try and facilitate trading links between those countries as well. And basically say, like European consumers and to an extent governments can pick up some of the slack that the US is kind of letting off as Trump basically weaponizes the role of the US economy as the world's consumer of last resort. Whether or not that happens is, I think, an open question. But also, certainly, if I was a government in the global south, I would be looking at, right, okay, what are our long-term options in terms of diversifying our export markets, in terms of building new links between ourselves and other advanced economies, and also amongst themselves. Now, that's going to be quite difficult to do during a time of outright recession. But as we look to the future, I think it's going to be the only real course of action for a lot of these states.
You're talking about the long-term opportunities, of course, in the immediate term, everything's looking quite bad. So a recession on the way.
Everything's just
inflation
up in
going
the air
up,
right now.
up in the air. Where I was going with this, though, was the speculation that maybe Donald Trump might do some kind of U-turn, might bring the tariffs down, might reach some kind of negotiated settlement. I'm going to show two different key players in the Trump administration. This is Scott Bessent, US Treasury Secretary, so that's the equivalent of our Chancellor. He's getting grilled on Fox News today. Then I'm going to want your response, of course, Grace.
You're talking about $6 trillion in market value loss in a week. You're talking about CEOs now unwilling to give guidance for 2025. Is there a response or a backup plan for what seems to be corporate America shutting down corporate activity? IPOs put on the shelf, M&A deals put on the shelf, CEOs not giving guidance. I spoke with one CEO last night. He said, we're cutting our capital expense budget. I'm cutting my travel budget. I'm doing everything I can in terms of cutting so I don't have to cut jobs yet. But that is, of course, on the horizon because we're cutting capital spending. What do you do in that regard in the coming weeks and months as we see more CEOs talk that way?
Well, I think in the coming months, CEOs won't have to talk that way. And what can we do in the coming weeks is, we have opened this process of negotiations country by country. It's going to be a bespoke, tailored process for each country. And as we strike these trade deals, I think that we will see greater and greater certainty.
So that was Scott Bessent sort of suggesting that it might be the case that these tariffs could get negotiated down. We could, to some degree, go back to normal. Before I go to you, let's go to Peter Navarro. He's one of Trump's more hawkish advisors.
But my point here is this: they're coming now and saying, we want to talk, we'll lower our tariffs to zero if you'll lower your tariffs. That's not the problem. Vietnam is a great example, Laura. They sell us $15 for every one we sell them. Zero tariffs would get us no reduction in the $123 billion deficit we have. And five of that $15 they sell us, you know what? It's China. It's that clip you showed about Cambodia, how China just comes over.
Thing, right?
It's the same kind of, we call it transshipping.
So you heard there, I suppose, the two wings of the Trump administration when it comes to this issue. So Scott Bessent, the moderate, sort of saying, we might be able to negotiate these down. Maybe everything will go back to something similar to normal. And then you've got Peter Navarro, who's much more hardline, suggesting so long as any country has a trade surplus with us, we will keep very high tariffs on them. Do you have any idea who could win out here?
This is what I mean, by the way, when I say things are up in the air, in the sense that it's hard to see. And I don't want, I don't want to say I know what's going to happen, because obviously I don't. But it's hard to see how things play out if they continue as they are. because we are looking at a crisis on the scale of perhaps we haven't seen since the 1930s, when we had a kind of parallel trade crisis that obviously followed on from a really significant financial crisis as well. It is hard to see how things continue as they are and how he could continue without any kind of changes to these stated policies, because it would be disastrous. Having said that, this guy, Novara, wrote this book, Death by China. He was found to have basically made up a bunch of stuff that was in that book, made up interviews. And his whole philosophy, his whole strategy is basically wrenching back American hegemony from countries that he and now Trump perceives as having undermined that dominance through their unfair trading practices. Now, of course, it doesn't matter that the US has itself been a real kind of practitioner of those same unfair trading practices, because the only thing that really matters is securing US dominance of the world economy and US hegemony. And this whole idea of like trade as a weapon to kind of beat one's both allies and potential rivals into submission really sits at the heart of his perspective and of Trump's perspective. And I just wrote a piece on my Substack actually kind of explaining what that looks like, and why I think he's chosen to pursue what looks like a pretty kind of self-destructive strategy in the long term. The way I always like to think of this, right, is there are so many really radical transformations that if you were a socialist, you would want to do as soon as you got into office. So the kind of like, democratize the whole economy, hand over a bunch of stuff to workers, I don't know, like Allende style democratic socialism, as soon as you enter office, capital controls, that would be the kind of Navarro wing of the left. If you tried to do that within a capitalist global system, you would get completely and utterly destroyed if you tried to do everything at once. Obviously, the kind of non-reformist reform strategy is to try and build up worker power, insulate people's subsistence from the ups and downs of the market, create some space within which you could then pursue much more radical policies. But the Trump administration has basically done this kind of like full throttle kind of disaster capitalism of the kind that, if it was on the left, would be insanely destructive and would create a really significant crisis. And it is creating that same sort of crisis now because, there's only so much change, fundamental change, political change, really, that you can introduce in a capitalist economy in the short to medium term without dramatically upsetting the balance of power and the forces of production. And I think Trump is realizing this. If not Trump realizing it, then certainly other Republicans around him are realizing it. And the question now is whether or not he has so much personal power that he's basically able to kind of stave off all of the naysayers and push through what will be an extraordinary period of pain and hope that he basically comes out the other side with a new architecture for the world economy in place that can then be built on and won't be able to be reversed. Or, which I think is the more likely scenario, that he is stopped before we get to that point.
That was economist Grace Blakeley speaking to me earlier today. There's a very interesting new post from Donald Trump, which I'm going to read to you in one moment. Before we get that up while you're on tenterhooks, this show is only possible because of your kind support. If you are already a Novara Media supporter, thank you so much. You make all of this possible. If not, you know where to go, novaramedia.com/support. I'll tell you what's in this Truth Social post. Right? So Donald Trump says, based on the lack of respect that China has shown to the world's markets, I am hereby raising the tariff charged to China by the United States of America to 125%. So going really nuclear with China, effective immediately. At some point, hopefully in the near future, China will realize that the days of ripping the USA and other countries off is no longer sustainable or acceptable. Conversely, and based on the fact that more than 75 countries have called representatives of the United States, including the Department of Commerce, Treasury, and the US Treasury, to negotiate, he's already said the Treasury. I wonder what the USTR is anyway. To negotiate a solution to the subjects being discussed relative to trade barriers, tariffs, currency manipulation, and non-monetary tariffs, that these countries have not, at my strong suggestion, retaliated in any way, shape, or form against the United States, I have authorized a 90-day pause and a substantially lowered reciprocal tariff during this period of 10%. also effective immediately. Thank you for your attention to this matter. So that's very, very interesting. So sort of massively raising the stakes when it comes to China, but for, well, not necessarily everyone else, but for 75 other countries, there's been a pause to the tariffs. Very, very significant. We'll come to the issue of how China might respond, because I had a great interview earlier with an expert on China. I think I have got Helena here at the moment. This seems like quite a big deal, doesn't it?
Oh yeah, almost certainly a very, very big deal. Very interesting as well that the 10% tariff basis is what Trump was applying, or what Scott Bessent was applying to other countries to ensure the countries they were threatening with tariffs, that they were trying to bully with tariffs into accepting different trading terms, had a baseline everywhere else. They couldn't send goods through other countries to avoid United States tariffs. That was why they had the 10% baseline. So that being moved down to 10% shows that there is a willingness to try and that this is mostly about the global order with regards to China, rather than just a broad desire to get the whole economy to heal globally, rather than just China itself, which I find quite interesting. Also very interesting that it's the 75 countries who they had trade deficits with, who have gone to the United States, who haven't retaliated, who are going there offering some kind of concession to Trump so that he can reorder things against China with their support, potentially. They've had theirs reduced down to 10%. Yet all the other countries that had trade deficits, they're still getting the 10%. So Keir Starmer and the international trade secretaries and all those people in our government who were convinced they could get their own sweetheart deal by trying to capitulate to Trump, by trying to offer him all of these different concessions, by getting rid of the digital services tax, we've got nothing, because everywhere else is just getting the 10% that we've got. So I find it very, very interesting that we were continually told this is vindication of Keir Starmer's approach to negotiations with the Trump admin, that we are still just getting what everybody else who's also decided they want to go and negotiate with Trump at this point in time, and they're just getting the same 10% that we now have. Again, showing the discussions of the Brexit benefit of the 10% or the vindication of Starmer's strategy with regard to Trump, again, it was completely irrelevant, because that 10% level is their basis line to ensure that other countries can't use the countries who have trade deficits with the United States to ship goods when they have a trade surplus in those other countries. So it's the surplus countries that are getting this 90-day pause. But I'm assuming a lot of this also is to do with the fact that there is just a lot of disquiet in the Trump camp with a lot of his backers over the state of the stock market at the moment. We have seen, since one tweet about a potential 90-day pause, put a massive swing on the stock market back up before it was found to be fake, and then it all went back down again. It shows you that the power of an individual message that potentially is leading to some softening of the Trump position, which I think was always also a 90-day in that fake tweet, is something that can be done to prop up the stock market. So there's also potential this is being done deliberately as well, in such a way as to try and cool the market that the bear market that we're currently in with regards to US stocks, because that is what is worrying most people in the background in the Trump camp, who are not massively on board with Scott Bessent's kind of global rearrangement strategy. Interesting.
So you said there sort of what we saw on Monday. I remember, because that was my show as well. There was these swings where there was a kind of fake news tweet saying there might be a 90-day pause, and then the stocks massively went up. But then they went back down when people realized it was fake news. We can now see what the effect of a tweet which is actually from Donald Trump's account saying there's a 90-day pause. I think we can get up to Dow Jones. You can see from the moment that tweet was sent by Donald Trump, or a post, whatever you call it, on Truth Social, that has just massively swung up. So it's gained 5.43% today. That's the Dow Jones. So that's one of the indexes of big American companies. The S&P, which is the other big index, up 5.82%. So obviously people are loving the idea of this pause. I think exactly as you were saying, Helena, sort of listening to all the financial podcasts, they're all saying, there was a version of the tariffs which kind of made sense, which was that you sort of isolate China for geopolitical reasons, but then continue trading normally with everyone else. That didn't seem to be what Trump wanted to do, because he didn't just care about a geopolitical battle with China. He also wanted to, he just hates trade deficits and wanted to bring loads of factories back to the United States. It seems like he didn't like the stock market going down, and said, okay, maybe I'll revert back to, it's a very hawkish position. I don't think there should be massive tariffs on China, but it's a position, tariffs on China and free-ish trade with everyone else, that Wall Street, can come to terms with in a way that it couldn't, having massive tariffs on everyone, everywhere. Huge story.
I think what's interesting about that as well. What's interesting about that as well is I think there's also probably some acknowledgement there that they can't treat themselves as the consumer of last resort. They can't bully people into continually being friends with them. The biggest reaction that we'd seen from this was this kind of instant kind of geopolitical strategy from loads of countries across the world to say, well, if America wants to isolate themselves, let's let them isolate themselves. Canada, EU, China, countries in the global south all came together. I mean, countries who you'd never think would be friends came together and say, well, let's push back against what America is doing here. And I think there is probably at least some amount of worry in the camp that from the national chauvinists who they fully believed and backed this idea that America couldn't be stopped. It was too big to fail and too big to ignore, which wasn't really true. It wasn't true from what we'd seen from the international reaction to the initial belligerence of the current administration in America. And I actually think the damage probably has been done. I really do think that the damage has been done here and that people will continually view America as an unreliable trading partner. They won't take this as just hawkish position on China. They'll see it for what it is, which I think is more of a retreat and a changing of position and a U-turn rather than something that's a kind of a more natural position that they've taken here and really a kind of stepping down, which, once you've done that once, it's difficult to reason why it couldn't happen again if situations are different.
The trade war then with most of the world is on pause, unfortunately for China, but luckily for this particular show, we have a pre-recorded interview on the trade war with China, which is very much still continuing. So let's go to that next. US President Donald Trump's 104% import tariffs on Chinese goods came into effect today, and sticking to their word to not back down in the face of Trump's trade war, China's foreign minister made this statement on Wednesday.
The U.S. is still abusing tariffs on China, pursuing maximum pressure. China firmly opposes and never accepts such hegemonic and bullying acts. If the U.S. truly wants to address issues through dialogue and negotiation, it should show the attitude of equality, respect, and mutual benefit. If the U.S. overlooks the interests of the two countries and the international community and is determined to fight a tariff and a trade war, China's response will continue to the end.
The Chinese government has now followed through on that threat, announcing further tariffs on US goods today. From Thursday, an extra 50% levy will be applied to the country's imports from the United States, taking the total tariffs to 84%. China has also called on the world to stand with it against Trump's new economic order. The state-run China daily newspaper ran an editorial asserting that only global unity would triumph over trade tyranny. But after China announced their extra 50% tariffs on the United States, US Treasury Secretary Scott Bessent sounded unfazed, speaking to Fox News.
I think it's unfortunate that the Chinese actually don't want to come and negotiate because they are the worst offenders in the international trading system. They have the most imbalanced economy in the history of the modern world. And I can tell you that this escalation is a loser for them, that they have some very smart, the economists, the academicians, technocrats within their bureaucracy, and they would be telling the leadership that we do not have the edge here. They are the surplus country, that their exports to the U.S. are 5 times our exports to China. So they can raise their tariffs, but so what?
So since Scott Bessent gave that interview, sort of breaking just now, Trump has further escalated the trade war with China. He's raised tariffs to 125% on Chinese goods. That's going to completely freeze trade between the two countries. He's also paused the trade war with everyone else. So it's now very much a US-China story as opposed to US versus everyone story. So where will the trade war between the United States and China go? Well, earlier today, I spoke to Zoe Liu, a senior fellow for China Studies at the Council for Foreign Relations in the United States. Now, I began by asking her whether she was surprised by China's extra 50% tariff on US goods.
No, I'm not surprised. And in fact, I would say this tit for tat tariff retaliation or trade tension escalation is very much baked in. And from the Chinese government perspective, they have been preparing for it for quite some time.
And Scott Bessent, so the US Treasury Secretary, he was on Fox Business today saying, I think he was told about these 50% retaliatory tariffs. Of course, he knew already, but sort of they were put to him and he said, who cares? And the argument he made was that China runs a massive trade surplus with the Americans. So China exports a lot more to America than America exports to China. So why does Washington care if China puts on extra tariffs? What do you think of that argument that he's made?
I do think that Secretary Bessent, he has a very successful track record as an investor, and he has a lot of expertise on finance. But I feel like from an economist perspective or political economist perspective, focusing on trade deficit is not or only focusing on current account, or for that matter, the trade cross-border flow of goods and services is not necessarily the whole picture of U.S.-China economic relationship. And I remember President Trump in his retaliation against China's retaliation towards the reciprocal tariff, he said, well, China runs $1 trillion trade surplus against the United States. And I think that number is way much exaggerated because the number in terms of trade of goods is barely 200. It's around $280 billion. It's far from $1 trillion. But indeed, China takes a huge portion of U.S. trade deficit, but that speaks to America's consumption power rather than anything else. It actually speaks to the strength of American consumers.
And how will sort of these tariffs, because I mean, whether or not the trade war continues to escalate or whether the tariffs, go back to 34% or 44% or whatever they are, this will have a big impact on Chinese exports to the United States. What will that look like? Will that mean factories closing down and people becoming unemployed? Will China go into a recession?
Rising trade protectionism is nothing new for the Chinese. And in fact, if we look at the numbers, over 190 WTO cases against China last year, and they recognize the global rising protectionism against Chinese cheap exports is not just the United States. So in that particular context, and recognizing the risk of President Trump's second term with the potential of trade tension escalation, the Chinese government put out robust plans to front-load fiscal and monetary stimulus measures, as well as concrete measures to boost consumption domestically. And if we look at the recently concluded National People's Congress, the number one task the government put out for this year is to boost domestic consumption. And then the second one is to continue to improve investment and technological development. So we recognize the rising trade barriers in terms of and the potential negative effect on Chinese factories, on Chinese unemployment. But to cushion that, they are hoping that by stimulus measures, by boosting household consumption, they can somehow mitigate or using domestic consumption to drive up demand or mitigate the lack of demand from international market.
Great, that's interesting. So that's sort of suggesting that instead of China now having to find a new export market, so I know there's sort of discussion, if they can't export to the United States, they'll have to double down on exporting even more to the European Union. But you're saying, no, instead, what they can do is stimulate domestic consumption, and that will mean that these factories don't have to close down because it will be Chinese people consuming those goods.
I think that is what the Chinese government tries to do, and I think that is the right approach to address China's chronic structural imbalances. Since 1978, when China started the reform and open up process, they established this ex export-oriented economy. And for a long period of time, the economy has been very much dependent on export. At its height, export was over 20% of the Chinese economy, or nearly a third of the Chinese economy. But in recent years, export has stabilized around 18 to 20% of Chinese GDP growth. That does not necessarily mean the value of Chinese export decreased, but because the denominator, the Chinese GDP number has grown a lot. And I would also emphasize that the risk, the potential for China to continue export or expanding Chinese export to either the European Union or the rest of developing countries, that hope is probably going to be diminished as well, because the rest of the world is also recognizing China's so-called overcapacity challenge. European leaders went to Beijing, talked with Chinese leaders about China's the negative implication, the shock to European competitiveness. So from that perspective, China also anticipated rising trade tensions and the concerted effort trying to resist the influx of cheap Chinese exports to the rest of the world.
You sound quite optimistic, I should say, sort of about sort of the prospects for China amid this trade war. I know sort of lots of people around the Trump administration, their main priority actually seems to be this whole trade war is to try and keep China down. You think that the Chinese Communist Party leaders in Beijing, they've kind of prepared for this and they will be able to take this to some degree in their stride?
If we look at the tone from Beijing, I think the Chinese diplomats said many times that if the Trump administration wants a war, whether it is tariff war or any other type of war, Beijing will respond and will retaliate resolutely. And in addition to that, this week there have been two articles on the People's Daily. One talks about China should focus on its own issue, and then the other article talks about how China should insist or should continue with reform and open up, or the so-called high quality open up. In other words, I think it's not necessarily that the Chinese leaders have successfully resolved or solved China's structural economic problem. In fact, they have not. Although the Chinese economy is on a relatively more stable footing than when the Chinese economy just came out of COVID. But that by no means means there is no problem. In fact, the four major problems that I emphasize challenge the Chinese economy, including debt, demand, meaning export and domestic consumption, and demographics, the negative population growth, aging population, and the rising cost of social security, and then lastly, decoupling or de-risking. These four areas, these four problems are still there. But what made China appears less worrisome or less problematic is not that they solved these problems, but because the tariff tension, the self-inflated tariff uncertainties, and how the tariff policies are implemented or are announced. These huge uncertainties generated a lot of known unknowns or unknown unknowns that makes China seems to be relatively certain. So I'm by no means saying that the Chinese economy is going to be perfect or they solved the problem. It's just in terms of relativity.
That was Zoe Liu, Senior Fellow at the Council for Foreign Relations, speaking to me earlier today. We did have another story lined up for you, but we're going to stick to the big breaking news of the past half hour, which is Donald Trump appears to have blinked. He didn't like the stock markets just completely collapsing, and he has paused for 90 days tariffs on everyone except China. And when it comes to China, he has increased them to 125%. Obviously, my guest there, we were speaking before, I say that policy announcement, but before that post on Truth Social, because that's how all of this is done, before that was made, which potentially does put China in a more difficult situation than they were earlier today, because what everyone was saying throughout most of the day, and in fact most of the week, is that because Donald Trump and the United States are now attacking basically everyone, China has a really big pool to fish from when it comes to allies. If it is now the case that America is sort of, I suppose, that they've blinked in the face of everyone else other than China, where they're really going nuclear with those tariffs, that's presumably a bit more difficult for them. It is worth noting, though, the fact of pausing the tariffs everywhere else doesn't mean this trade war still isn't on and incredibly significant, because even if it's only the case that tariffs sort of remain high between the United States and China, that's still an awful lot of trade. And there's been so much discussion over the past few days about things like iPhones, right? So much of Apple's supply chains still go through China. So you will still see a rise in prices in the United States, but not to nearly the same degree as if there were also, 46% tariffs on Vietnam and really high tariffs on Bangladesh, right? It's going to be much more manageable for the Americans. That's why you're seeing the Dow Jones, the NASDAQ, the S&P all massively going up on the basis of that Truth Social post. Very interesting. There was another Truth Social post from Trump earlier today, which when I first read it, I didn't quite understand the significance of it. I think it's only become apparent now to everyone in the past half an hour. So I think we can look at his Truth Social post from earlier today. So he said at 2:37 p.m., I think that's our time, this is a great time to buy Donald J. Trump. So essentially saying this is a good time to buy shares, right? And what happens 2 hours later is he posts a tweet saying, I'm pausing the tariffs for 90 days. And then obviously all of the stock market massively goes up. So I don't know if it's insider trading, because insider trading is normally when you buy shares knowing something's about to happen. I mean, I presume, you'd imagine that he and sort of many of his entourage probably have done some insider trading today. If you know this stuff in advance, you can make a tidy packet. But he's kind of bringing the whole world into this insider trading game. I suppose in a way it's to build the mystique of Donald Trump, basically saying you should believe what I say and do what I say, because even if it sounds mad at the time, I can make it into a reality. Because, it was actually at 2:30 today a good time to buy, because Donald Trump, a few hours later, was about to pause the tariffs. Helena, this seems like it should it be illegal? I don't know. It's very it's very different, isn't it? This idea that you've now got politicians saying you should buy stocks now, and then 2 hours later making a decision which massively increases the price of stocks. I suppose in a way what he's doing is he's helping his followers, the people who believe Donald Trump. They got rich today, and the people who dismissed him didn't. Now, obviously, this is not me saying you should believe Donald Trump. This is a terrible way of making policy, right? Even with these tariffs paused, this has still been really damaging to the global economy, to jobs everywhere. But yeah, what do you make of this?
I mean, also, it's interesting you say, well, this should be illegal. Well, of course it should be illegal, but since when did the legal qualms about anything ever matter to Donald Trump, right? Ever since he was elected, he has ignored the interventions of judges. He has done things that are blatantly illegal and unconstitutional, so it being illegal isn't too far. Also interesting, but I'm assuming all the people who've bought the dip and are now profiting, given the stock market rally and the intervention of what he truthed out. That's apparently what you call it on Truth Social. You truth out your tweets on Truth Social. And that causing the stock market to rally has benefited a bunch of his followers. Those are all the same people who say, oh, Nancy Pelosi is terrible. She's a stock market manipulator for trading loads of stocks in Congress. They're right to be critical of her. I am also critical of Nancy Pelosi. I think she does insider trading too. That's my assumption, given how good her trading is, given her position in Congress. But regardless, this is the same thing Trump is doing. If you're going to attack Pelosi for it, you should attack Trump for doing it. I think it is interesting, though, in that we are seeing a lot of fallout from people saying, my 401k is gone. I can't believe I trusted Trump to elect him to protect my wealth. We voted for Donald Trump because we were angry with the economy under the previous Democratic administration, and him then crashing our 401ks and our retirement savings funds. It's a great betrayal. And we've seen the electoral fallout from what's happened with Donald Trump ever since he's been in office. And we've seen the Wisconsin Supreme Court races. We saw special elections in incredibly deep red districts in Florida that swung, in one place 22 points to the blue in a Florida, like that was a panhandle seat in Florida. Crazy numbers we're seeing in terms of the electoral backlash to Donald Trump's few days in office. And this was before the tariffs were implemented that crashed the economy, right? So there's a huge Donald Trump base, a MAGA base, that were rapidly losing faith. That obviously there are a lot of cultists who trust the plan, but loads of people were genuinely upset because they trusted Donald Trump to be the businessman who could manage the economy, which of course is a load of nonsense. The guy's been bankrupt, was it 2 or 3 times now or something like that? So we had to get these people on side. And one thing that these people are bought into with the rise of kind of the Bitcoin, right, the cryptocurrency, right, that he's bought into, he was one who rug pulled them with a bunch of cryptocurrency as well. He's got all of these people on board implementing a cryptocurrency minister, I believe it was, in their, or in the Treasury Department at least. His base is full of people who like financial speculation. This is why they were angry with him when he did what he did and to the stock market in the initial wake of these tariffs. So the way you bring these people back around is you go, I've got a little tip for you. I'm going to make your money. I'm going to make you your money back. I can rescue this base. Now, I personally think it's too late. I think it's not too late, but I think that a lot of damage has already been done. And we've seen it in the results again before the tariffs last week with the special elections and the Supreme Court election in Wisconsin, in that there is already an electoral backlash. Ettinger Mentum, I don't know if you know him, he's an electoral analyst from kind of the left wing of the Democratic Party, puts a newsletter on Substack. He was looking through the numbers on this, and it's quite stark how both low propensity and high propensity voters are turning against Trump, where he used to be really well liked amongst low propensity voters who came out in large numbers to elect him as president, and they're now not voting for him in the wake of even the higher turnout in like the state Supreme Court elections in Wisconsin. So there is an actual noticeable shift both in MAGA people who are now registered Republicans moving away from Donald Trump and the Republican Party, and a big swing from independents as well. And independents are definitely the more kind of rational actors in terms of electoral outcomes, who see fundamentally their own material conditions as their driver of where they vote. And so these people seeing their 401ks collapse, these people are almost certainly going to buy out. So he has to do something to try and rescue both his base and the economy. So this all makes sense to me, what we've seen over the past 5 hours or so.
I mean, the idea actually of, you know, the amount of power Donald Trump has to do favors for his friends. Obviously, you know, Bill Ackman, we've spoken about him this week. So he's someone, he was, well, he still is a billionaire, but he's a billionaire hedge funder. And he sort of was one of the first big money people to really go all in for Trump before the presidential elections last year. He was then very much upset with Donald Trump when it came to these tariffs. He even suggested that maybe the reason they were sort of putting forward these tariffs and crashing the economy is because some of Donald Trump's advisors had bought a bunch of treasuries, I think it was. Yeah, had bought a bunch of government debt, and that he assumed that sort of when there's chaos, that would help the debt, as we've seen today. Not quite as simple as that. But anyway, Bill Ackman's very pleased today. He says, "Thank you on behalf of all Americans." So Bill Ackman, the hedge fund billionaire, now speaking for all Americans. But you do wonder whether or not, you know, I don't want to cast aspersions, but it's very plausible that Donald Trump could have said, "Hey, you guys, you doubted me," an hour before he does that tweet. Now actually would be a good time for you to strengthen your positions in the stock market. There are so many people close to Donald Trump who could have made millions and millions and millions, billions of pounds today if Donald Trump had told them an hour in advance what he was going to tweet. And I don't think any of us can really have any faith that Donald Trump wouldn't do that. That's definitely not beneath him when it comes to how he behaves. So just sort of the possibility for corruption here is just enormous. We might have a clip for you. We're trying to get your reaction. Let's have a look at this. I'm not exactly sure what it is yet, but let's be surprised.
We have had more than 75 countries from around the world reach out to President Trump and his team here at the White House to negotiate better trade deals for the American worker. We have been overwhelmed with the amount of requests from countries around the world. I'll let the Secretary speak to that. We will continue with the tailor-made negotiations that I spoke about yesterday. In the meantime, there will be a 90-day pause on the reciprocal tariffs as these negotiations are ongoing, and the tariff level will be brought down to a universal 10% tariff. The Secretary here has been a huge part of the president's trade team, of course, and will continue to lead these negotiations moving forward to look out for the American worker, which is always President Trump's goal. So I'll kick it over to our great Treasury Secretary, Scott Bessent.
Good, thank you. And we saw the successful negotiating strategy that President Trump implemented a week ago today. It has brought more than 75 countries forward to negotiate. It took great courage for him to stay the course until this moment. And what we have ended up with here, as I told everyone a week ago, they're in this very spot, do not retaliate and you will be rewarded. So every country in the world who wants to come and negotiate, we are willing to hear you. We're going to go down to a 10% baseline tariff for them, and China will be raised to 125 due to their insistence on escalation.
So, I mean, this is what we were speaking about earlier in the week, that sort of Donald Trump, if he does do a U-turn, and this does seem to be a massive U-turn, would claim some kind of victory. So, Scott Bessent there seems to be suggesting, this was, you should have trusted Donald Trump. He knew what he was doing. We said, don't retaliate and we'll, it's a good idea for you not to retaliate. And then, I suppose what's a bit strange is if you say we're going to put these massive tariffs on you, don't retaliate. And if you don't retaliate, we'll drop the tariffs. Then what was the point in putting them on in the first place? It's sort of saying, it seemed very odd to me. What did you make of that? Clearly, this is going to be strung as sort of, they're going to try and make this seem like this all made sense somehow. Clearly, what's happened is Donald Trump has blinked because he doesn't like the direction that the stock market was going in. And people were telling him that the polling's terrible. There are sort of many Republican senators and Congress people who are about to speak out about this because they're worried they're going to lose their seats in the midterms, and he has blinked. But they're trying to now spin this as the plan all along was to, because they didn't even fret that the tariffs were imposed last night, was to impose a bunch of really steep tariffs for 12 hours or something. And then if countries didn't retaliate to those tariffs, just go back to where we started. Are many people going to buy this, that this was a sort of incredibly impressive game of four-dimensional chess? Or do you think most people will see this for what it is, which is a badly thought-out plan, which has now, it seems, been dropped?
Maybe you could see it as a test of loyalty, saying, well, if these people are the kind of countries that wouldn't retaliate because they see us as being too powerful to retaliate against, then by doing so, it does test their loyalty, right? The Bessent plan of the creation of the Mar-a-Lago Accord, it relies on countries' loyalty. It relies on countries' loyalty to the United States to side with them, to keep the dollar being the reserve currency, even when they reduce the dollar's value to try and incentivize the increase in manufacturing capacity in the United States by dropping the value of the dollar, which at the moment they couldn't do because with an expensive dollar, manufacturing is difficult because people can't afford your exports. So maybe there is some kind of method to the madness. Again, that doesn't mean that the method isn't mad in and of itself, but there could theoretically be methods to what's being done here. But again, what's interesting, I find really, really interesting, especially with the kind of Bill Ackman stuff, there is a lot of tension between the MAGA base and the MAGA establishment. This class collaborationism between the manufacturing, post-industrial Rust Belt base of kind of the MAGA movement in the Make America Great Again style. Look what it was like back when we had these manufacturing jobs, and now against the interests of the over-financialized, the tech oligarchy that backs him up the top. There's a real tension here that is really difficult to try and keep together, because any good leftists know that there is a fundamental conflict between owners and workers. Keeping these people on side through trade wars or through internal persecutions in your own country is how you do it. Class collaborationism is like the far right's main way of being able to maintain power. We can bridge the gap in this material conflict between these two sectors of society by finding a greater goal, whether it is war with China, whether that be trade or otherwise, or is it their internal scapegoats? Is it the migrants? Is it the trans people? There's always got to be some way of bridging that conflict. And you've got to do it in such a way as the people don't notice that you're hoodwinking them. And that's the thing, is that you can't really bring this manufacturing base back unless you undermine the wealth of American middle classes. And of course, there's a similar kind of conflict on the left, on the kind of the liberal side of politics too, where they have to try and mesh together the affluent middle classes with kind of the struggling lower middle classes, who also kind of have a push-pull in terms of asset prices too. So this is really breaking apart the neoliberal realignment of how people want to see themselves in kind of American politics, with no real left wing to kind of force things to be back about like material interests and class unity rather than class collaborationism. So this is a really difficult line to tread, and that's why I think you're seeing a lot of moving up and down. Because I think Trump himself, I think he really does try and perceive himself to be like the hero of the American worker. I think he's really bought into that mythology of himself. But the Republican Party, that didn't used to back him, right? They didn't back him. They didn't want a trade war with China until he started one in his first term, which then the Biden administration continued because they had a smart industrial policy. Bernie Sanders was very clear: we can have industrial policy and smart, selectively applied tariffs and not create a trade war with China. We don't want a trade war with China. We don't want a new Cold War, but we don't want an all-out free trade agreement and a free trade world order that undermines worker bargaining power and creates wage arbitrage. And the pendulum's been swinging wildly between the two without that nicer center. The Trump administration and the Republican Party that accept him has the full backing of big capital. It has the full backing of big capital. And obviously the weak link is Trump. So they have to continue doing this dance where it goes up and down, until they find that sweet spot where they can win over the working class base, whilst also placating the oligarchs at the top, who are, again, of course, as any leftist would tell you, as Ed, are the real enemy. The reason why American working classes are poor is because of inequality. It's because of low taxation. It's because of low state ownership, low collective bargaining power. A lot of people amongst the MAGA base perceive themselves as having been screwed over because the good manufacturing jobs have gone. When there was nothing actually good about the manufacturing jobs, they were good because they were heavily unionized, right? They were good because they were good paying because of the trade unions that supported them. And it was the reduction in trade union power that's let that go away and has allowed them the race to the bottom in the American labor market. Matt Bruenig, the other day, I think it was April the 7th, tweeted out a really interesting statistic that I didn't know, that McDonald's workers in Denmark earn more per hour, and that's purchasing power adjusted, than Honda workers in Alabama in the United States. So it's the labor model that is the problem here, which is what should be the point for the Democrats, but they will refuse to actually fully embrace that because they're also beholden to capital too. And that's allowed the MAGA base to be able to be bought into the Republican project and the Trump project by finding a scapegoat and not actually looking at the real issue here. The real issue, which is worker power, which is the power of capital within the economy and the lower remuneration for labor within that dynamic. And that's how we got here and why it's so difficult for the Trump administration to find the sweet spot of policy that doesn't break apart that coalition.
There's another ambiguity here, which I'm not sure if I'm still 100% clear or if the American government is 100% clear, because obviously in that Truth Social post, Trump said, for any country that hasn't retaliated, we will pause the tariffs. But as far as I understand, the EU had begun retaliating, right? They had put tariffs on certain things, or at least they'd voted through tariffs on certain things. Maybe they hadn't come into effect yet. But Levitt, so that's his press secretary, have said that, it will be paused for everyone but China. And so while Trump is saying, if what you were saying before about this loyalty test, sort of, I want to prove that, no one dares stand up to America. It does seem, if I'm understanding it correctly, that it doesn't actually matter whether or not you did retaliatory tariffs against Trump. If you're not China, they're paused. So the Europeans did put some retaliatory tariffs on America, but they still get them all paused and they go down to 10%. Because, I suppose it's just the incoherence of it all, because it seems to have all been made up on the hoof. But yeah, it doesn't. It seems like you can have retaliated against the United States and still get away with it, so long as you're not China, is what it seems to be. And I don't know how the hell you spin that as some kind of masterful victory for Donald Trump.
Well, then if it looks like to me then that it isn't a test of character, then I wasn't sure whether those 75 countries was everybody who'd had higher tariffs or whether it was just specifically people who hadn't negotiated or hadn't retaliated. Well, if that's true, and you say that it is, then it just seems to me that it is a climb down. They've noticed that they don't have the negotiating position that they thought that they did. The chauvinists were wrong. America isn't Billy Big Bollocks. And it turns out that if there was going to be a unified front, which the EU were negotiating, there was talks with China, there were talks with Canada, I mean, China were in talks with other countries in East Asia as well, and countries across the world have said, let's show a united front and show America what's what. And they've realised that they don't have the chips. They don't have the chips. They can't go all in. And you know what? I think that's good. That's good more broadly for people who oppose American unipolarity. Them admitting weakness, that's really big for us in our side of the coin on this one.
Well, at least Donald Trump's got a state visit to look forward to meet the Queen, even if his economic policy isn't going very well. Let's end there. As I say, still not entirely clear to me, because obviously I thought you were making massive sense when you were saying this is a loyalty test, but it also does seem like whether or not you retaliated, if you're not China, they're on pause. Maybe it'll become clearer what's actually happened overnight. For now, though, Helena, thank you so much for joining me this evening. Lots of breaking news to respond to. You've been fantastic, as always.
Thank you very much for having me. And as always, it's lovely to have you back as well, Michael. Always look forward to our shows together, and it's good to see you.
Cheers. Appreciate it. And thank you all for watching. If you'd like to support our work, you can sign up at novaramedia.com/support. We've been Novara Live. Thank you for watching. We'll be back tomorrow. I imagine it's going to be another busy 24 hours in terms of the news. So do tune in tomorrow at 6 p.m. You've been watching Novara Media. Good night.